Okay, well, let's get you, that much-awaited conversation. We have Adani Enterprises and the entire Adani Group, actually, which surged yesterday after Cantor Fitzgerald, which is a seasoned, old-time U.S. broker, sell-side broker. They initiated coverage on Adani Enterprises with an overweight rating. To talk more about the rationale behind the call, we have the analyst who wrote that report, Brett Knoblauch, is CFA and Director of Equity Research at Cantor Fitzgerald. Brett, great to have you with us here. Good morning. Thanks very much, and thanks for staying up for us late in the day. Brett, I want to start by asking you,
thank you for having me.
What prompted Cantor to initiate coverage at this stage? Was this a request from clients? What made you sort of, go ahead and look at this group, look at the business?
Yeah, I think we at Cantor are just looking to expand our presence across the globe. India is obviously a huge market, with the stock market now being the fourth largest in the world. And as far as my coverage, I kind of have a remit to go out and look at what I think is interesting, irrespective of what country or market. Obviously, Adani has been in the news over the last year, so we've spent some time looking into it. We thought, launching or initiating coverage on Adani Enterprises was, a differentiated approach, just because there's not a lot of research coverage out there at the moment. And I thought the timing was good right now. You have a lot of catalysts upcoming across, several of their different segments. But yeah, we think it's a good name that doesn't get a lot of coverage, and we think it deserves more.
So this, Brett, just one more point. The reason I'm asking that, I started with that, is because do you have a lot of sell-side coverage on stocks in India? Or this was... Yeah, sorry.
Sorry. No, right now, this was our first India company that we have under coverage, so I would expect more on the horizon.
Okay, perfect. That's interesting. So this is the first India company and in your coverage. Got it. Brett, hi, good morning. So you spoke about Adani Enterprises, but, I wanted to understand over the next 5 to 10 years, which is the business from the group where you're most optimistic on, where you think it could be a big winner?
Yeah, I think, when we launched on Adani, taking a step back, there's kind of, 3 main points. First, India is heavily investing in this country across all sectors, and that's all going to benefit Adani. Second, I think Adani Enterprises has a great history of identifying growth opportunities in India. Just look at the businesses as demerged and the current market cap of all those businesses as proof. And then more to your point, we think 3 segments, mainly roads, airports, and what they call a new energy ecosystem, are currently worth more than what all of Adani Enterprises is valued at right now. So that means investors are effectively getting rest of the business for free. Now, the segment that I'm probably most positive on, I would say within 5 years, is probably airports. This is a segment I think can do $1 billion plus of EBITDA within 3 or 4 years. Close comps are trading at 20 times that. So you could see within 3 or 4 years, Adani Enterprise look to demerge that business at a value close to 20 to 25 billion, and Adani's Enterprise's current market cap is just 40 billion. Beyond that, you look at new energy ecosystem, which includes solar manufacturing, wind turbine manufacturing, and then there are plans for green hydrogen ecosystem. That green hydrogen ecosystem, which actually is not in our current valuation, is something that could, within 10 years, do, call it $7 billion of EBITDA. Obviously, a lot of CapEx needed to get to that point, but that is probably the most interesting part of the business, just because they're tackling it from all sides. They're doing it from renewable energy, building a manufacturing facility for electrolyzers, or convert that to green hydrogen, convert that to ammonia and urea, which can be very profitable given, right now India relies a lot of imports for those products. So airports and that green hydrogen or green energy ecosystem, I think, are the 2 most interesting at the moment.
Okay, so you're saying airports and the green energy business are 2 most interesting businesses for you from the Adani Group. Got it. So why have you chosen to buy the holding company and not the individual businesses then?
Yeah, well, for the holding company, we didn't launch coverage on, call it, ports or gas or Adani Gas or Power or the Special Economic Zone. We thought starting coverage with the flagship fund would be the best option for us right out of the gate. Plus, we like it because it gets you a lot of diversification, to be honest, right? Within this one fund, you get exposure to several businesses, several innovative businesses that you otherwise wouldn't have buying one of the other businesses, which are a standalone play on one specific sector. Here, you're getting airports, your roads, renewable energy, called old energy or fossil fuels, with what they do with mining and call it commodity trading. So it's call it a diversified play on India, but with leadership that I think has proven the success of growing above market rates.
Hi, Brett. Good morning and good to see you. And Nigel on this side. Brett, I wanted to ask you, we got your positive, the positives that you're tracking from here, and you expect the airports business to do well and maybe demerge it in the next 5 years or so. But what's the risk to this entire thesis that you're putting out? Is there a political risk as well?
It's certainly a risk. I think political is a risk in any market, especially in the U.S. with potential change of leadership there. But certainly in India, I don't think it's tough to say that Adani Group as a whole has probably benefited from the current kind of political leadership in India, and if that were to change, certainly there's a risk there. But with that being said, I think if you look at all their businesses right now and how they're tied to the economy, like that airports business, the roads business, the renewable energy business, I don't think much would change if there was a change in leadership in India with the upcoming elections.
Okay. Globally, is there any comparable company that you track and you can benchmark the Adani Group to?
For the Adani Group, or specifically Adani Enterprises, it's a bit difficult, right? They're a publicly traded incubator, but instead of investing in seed rounds, they're building nation-state businesses. We like to look at the portfolio of companies on a call it a company-by-company basis, and we think there's a lot of good comps out there to then compare each specific company to. Like in airports or roads, there's very good comps, and in roads you have two more established players trading at 24 times. Adani's business is growing faster, just as profitable. So in our valuation, we think it's safe to value at a premium to that. And that's how we thought about valuation, from their mining business to roads to airports to renewable energy to their data center JV to their stake in Adani Wilmar. We think that's kind of the best way to look at valuation rather than call it as a whole entity right now, just because our whole thesis right now is the sum of the parts is worth a lot more than what it's currently trading at.
Brett, one of the things which many point out that there is not too much institutional ownership in the Adani Group shares, right? With sort of seasoned brokers like you initiating coverage now, would you expect that to change? I mean, is there a whole lot of interest in these shares? What kind of feedback have you got? I mean, I know it's just a day old, the report, as you've released it, but just your thoughts.
Yeah, I do think that has been a hindrance. I think some of that has been the lack of institutional coverage on the Adani Group. There's not many analysts out there writing research on it, which, when we first kind of stumbled upon it was a bit surprising, given I think it's the 10th largest non-financial stock in India, which is now the most populous country in the world. So I do think that's a bit surprising in terms of feedback we got. We thought interest was very good. Obviously, I think there's probably some growing pains, given this was our first launch in the Indian stock and putting the processes in place. But a lot of inbound demand. I think that is also something that's going to work for the benefit of the entire Adani Group is kind of flow dynamics. You look, at least from the big India ETFs that I track, the Adani Group doesn't really have any big institutional ownership.
Sure.
And I don't think that dynamic is going to stay the same for that long, especially given how big and how important they are to India.
Okay. Just one final question from my end. Since you started by mentioning that airports is the business that you're attracted to and you see big growth over there in the next 5 years, recently GQG invested in GMR Airports as well. Two-part question here. A, are you interested in GMR Airports? Would that be something that you would look to invest into? And B, did that investment from GQG in GMR Airports, did that inspire you to look at the Adani Group airport business as well?
I guess it didn't inspire me to look at it. I think what excited me about Adani Enterprises was just the collection of businesses that they have, and then I kind of worked backwards from that to look at different comps. But yeah, I think if you look at the entire airline ecosystem, from your airplane manufacturers to the airlines themselves, the airport operators have a very good business, right? Their revenues are based on how many passengers come, how many flights or arrivals, the cargo that those planes are transporting. So absent of a pandemic, it's a very good, predictable business. And if you look at a economy like India, where airline penetration is only 3 to 4%, where developed economies is closer to 15 to 20%, you can see how this is going to be a growth area for likely multiple decades. And with Adani having 25% of total air passenger traffic, 33% of cargo traffic, and that's without the Navi Mumbai airport being completed yet, which is going to more than double their current capacity. And for frame of reference, the biggest airport in the U.S. is Atlanta, and that's about 45 million passengers on an annual basis. And this airport is going to be about 90 million. So it's a huge airport that's only going to benefit them as airline penetration only increases in India.
Right. We leave it at that. Thank you so much for joining us and talking about your report. All the best. That's the word coming in from Cantor Fitzgerald on Adani Enterprises and the rationale behind why they decided to cover it. Let's do one thing. Let's take a quick commercial break. On the other side, our list of top 10 stocks is lined up. Stay tuned.